Hello, everybody. So I just wanted to share a few pieces of good news about Opendoor that have happened this past week. So the first one is that mortgage demand appears to be surging, and that's after we know that the Fed is signaling a pause in rate hikes. And in fact, I will show later the Fed Watch tool, and the market is expecting a 96% chance that the rates are staying flat at the next meeting, which means that there's a pause, and after the pause, there will be a drop. And this is causing a lot of demand. And it just so happens to be that we are at the peak of the buying season, the peak of the quote unquote nesting season where people go out and buy homes. And therefore, this is kind of an alignment of planet. And I think Opendoor will be successful at selling many, many more homes during this buying season. So that's the first piece of good news. Demand for mortgages is surging. Another piece of good news is the astute management of Carrie Wheeler, our CEO, former CFO, and she's good at finance, and she's showing this again to us. So, in the latest 8K form, the information, we found out that they were repurchasing 279 million of notes in a private deal and at 39.5% discount to par value. So again, if you calculate this at 39% discount, your purchase 279. That means that Opendoor is making a quote unquote gain of 110 million by buying back this old debt, which is absolutely wonderful. It's astute management. This company is benefiting from the market thinking it will go bankrupt. But that's not all. That adds to what they already did last month, right? Last month, they bought back other debt, and that debt yielded an $88 million savings and an $88 million gain. So if you add these two things up, they are at a total of 198 million in total savings from buying back all of that old debt, which is really great. And if you actually try to scale that, that's about 600 homes of the type that Opendoor typically purchases. It's about 600 homes for Opendoor, 198 millions. Or if you take the 7.8% negative margin contribution of their Q2 cohort, and let's assume you were to finance these losses with those savings, you could finance the average loss on 7,920 homes. So this is very much an astute move, and I'm very pleased whenever I see companies do that. And Opendoor keeps doing that, and who knows, they might do it again and again. So this is really great. And the last good piece of news is, of course, the CPI. CPI was released this week, and the rate cuts are coming. The CPI is clearly going down. And the US Consumer Price Index confirms that. That's why the market was up on Wednesday. But more importantly, when you look at the statistics from the Fed Watch tool, you can see that yes, we're expecting at the June meeting, we're expecting a flat interest rate. But statistically speaking, if there is more bad news coming over the next few weeks, like say banks going bankrupt, etc. If there's more bad news with regional banks, we could potentially see that statistic here. We're expecting 50% in July of the rate holding steady, but could be that a drop is predicted even in July. If you look 47% for a drop versus 50% for no drop probabilities, it wouldn't take much to change those statistics. And then the market is pricing cuts after cut. The market is pricing a whole bunch of cuts. If you look at 2024, there's almost nobody who's predicting less than 1%. So of course, these long-term predictions are less reliable. We know this, but it is very striking, the number of the Fed Watch tool. It seems like the Fed is done, and again, this is going to be very positive for Opendoor, because as the rate goes down, the real estate is going to boom again, in my view. This is not investment advice. This is just entertainment. A very quick video. I am very busy today. Thank you so much for liking. Thank you for subscribing. Have a great day.